Okay, so good afternoon, everybody, and welcome to the next panel. Thank you for joining us for this very interesting, important, and topical subject of energy in the Middle East region, and particularly renewable energy, the energy transition, and how that interacts with traditional oil and gas and the hydrocarbon-based economy. And to discuss this, I'm very pleased to have three eminent speakers. First of all, Dr. Karen Young, Senior Research Scholar at the Columbia Center on Global Energy Policy and one of my colleagues at Columbia. Dr. Bassam Fattouh, Director of the Oxford Institute for Energy Studies. And Jaafar Al-Taie, Managing Director of Manaar Energy Consulting and Project Management, based here in Abu Dhabi. So, we're at a particularly key juncture of the oil and gas industry now. Prices are pretty strong, the industry is doing well, hydrocarbon earnings are good, and the regional economy, particularly the Gulf economy, is doing pretty well. Despite all of the attempts to move towards renewable energy sources and low-carbon energy sources, those are certainly progressing, but oil and gas remains a critical issue. And events such as OPEC meetings and the monthly energy and oil outlooks of the International Energy Agency released today and OPEC released a few days ago still attract enormous attention and are critical for the health of the world economy. Nevertheless, we know there's a very strong pressure on climate change globally. There's an increasing advance in the performance and the cost of low carbon energy technologies, electric vehicles, solar and wind power. And these technologies are very much appearing and being adopted in this region too, particularly solar power, as we know, enormously successful in this region, nuclear power, particularly in the UAE, but also things like electric vehicles becoming more and more prominent, hydrogen, huge interest in developing hydrogen, along with major commercial challenges as well, but hydrogen very much an emerging topic. So we'd like to address really four questions in this panel. The first is to address the energy transition. What does this mean for the regional economies and for regional geopolitics? The second question is to take a look at the impact of the traditional energy industry and the energy geopolitics, and particularly in the case of the Eastern Mediterranean. It's a region of important gas resources, but of great political complexity and conflict. And what can that tell us about the future of developing gas resources in this region, and how that is different from how that might have happened 20 or 30 years ago? How does this energy transition affect regional economies, and how does the adoption of renewable energy affect them? How much is this an opportunity? How much are regional companies and countries capitalizing on the renewable energy opportunity? And then finally, what does this all mean for the regional picture of geopolitics? How does it change the power relationships between countries in the Gulf, between their close neighbors, and between other countries who are maybe struggling economically and politically? How can we take advantage of some of these opportunities in low-carbon energy while still maintaining the success and the economic importance of the oil and gas industry in an environmentally compatible way? So I'd like to ask each of my panelists in turn to make some opening remarks on these questions, and then we'll turn to discussion and to Q&A. So please, Karen, if you could kick us off.
Sure. Thank you, Robin, and thank you all for staying for the last session. I appreciate that. And thank you to the Emirates Policy Center and Dr. Ebtisam for this invitation. I wanted to start with sort of the big picture, as Robin's laid out. I mean, what does this moment in sort of geopolitical competition and the energy transition, what does that mean for this region, and what are the sort of big trend lines that we can anticipate? And I would divide those into sort of three categories. So what are the shifts in global finance and sort of financial interactions and interconnectivity? What are shifts in global trade? And what kind of markets does decarbonization create? So in terms of shifts in finance, what are we seeing? Well, for starters, the rise of the Gulf states is really changing the way we think about access to capital, particularly access to capital for the energy transition. So the GCC states have over $4 trillion in external assets. So that's investments placed all over the world in stock exchanges, in buying the debt of other countries, and including the debt of the United States. So that's one big shift. The other is in the way that we think about access to capital, particularly in emerging market and developing economies. There's been a lot written about sort of the Chinese strategy and Chinese debt diplomacy. That in itself is changing now. And what we see is that China is using basically systems of global capitalism, of markets, in the way that it is interacting with client states, particularly for their infrastructure needs. For example, 50% of China's lending to low and middle income economies now is done through syndicated loans. And 80% of that 50% is along with or in partnership with Western banks. So what's happening is that as we talk about these sort of South-South financial interactions, they're actually relying on enforcement mechanisms of our liberal economic system. So I think that's really important to keep in mind. In terms of trade and global trade shifts, South-South flows are becoming the dominant source of trade in our global economy, making up more than half of global trade now. That means that the intermediaries are changing. And more we're going to see opportunities in the energy transition for these third-party beneficiaries. As we see more protectionism, the use of subsidies, particularly for energy markets, to protect new energy initiatives like green hydrogen, for example, that's going to create opportunities for countries that can work as the in-betweens. We've seen it, for example, in Vietnam, as many Chinese solar-making facilities have moved to other countries in Asia so that they can still access US markets. Another change in global trade has been the idea that access to a market is not a given, right? It's a privilege. And this is a big shift in the way the United States thinks about its trade relationships with other economies. It doesn't mean that trade is diminishing. It's actually expanding. Even US-China trade is quite strong. But the way that we're creating barriers and maneuverability is becoming a bit more complicated. And that leads to a trend in bilateral trade agreements, in protectionism, in the use of tariffs, and the real need for more trade diplomacy and the sort of friend-shoring that you've probably heard about. And then lastly, this trend in terms of creating a market for decarbonization products. UNCTAD, the UN agency, suggests that we're going to need 1 billion new things of manufacturing, right? New manufacturing widget bots, whatever you want to call them, for our energy transition. And that's a size of about $9.5 trillion worth of companies, of firms, of products by 2030. So it's a huge opportunity for those countries that are able to place themselves in a necessary spot, right, as being an intermediary or as having manufacturing capacity to create the tools that we need in this changing economy and the energy transition. For the Gulf states, that's also a tremendous opportunity for change. If you're trying to diversify your economy to get into the supply chains of the next generation of the way that we fuel our economy and the way that we interact with each other, there is no other moment of transition in terms of global economic change than this one that we have seen in 100 years or more. So anyway, that's sort of my overarching framing of where we are in this transition and how that creates opportunities and also real moments of calibration for all states, but particularly those that are oil and gas producers and developing economies.
Great, thank you, Karen. So, Bassam, I think you'd particularly like to address the more traditional oil and gas economy and part of the region here, so please.
Thank you, Robin. First of all, I would like to thank the Emirates Policy Center for the kind invitation and also for this opportunity. And I would also like to congratulate Dr. Al-Taie for the 10th anniversary of the Abu Dhabi Strategic Debate. What an achievement. Robin, very often when scholars discuss the energy transition, they try to identify the winners and the losers from this transition. And given the dominance of the Gulf in oil and gas, and the many projections out there expecting oil and gas demand to fall sharply in the next few decades, there is this widely held misconception or very simplistic narrative that the Gulf as a region will emerge as a definite loser from that transition. And this narrative is based on a number of premises. The first is that the region will be impacted severely by climate change, and therefore it needs to invest heavily in adaptation measures. And this is going to divert funds for much needed diversification. Also, this narrative is based on the premise that oil demand will peak. Some are even projecting that demand will peak within this decade. And after it reaches a peak, it's going to decline very sharply. And of course, what's going to happen in a declining market is that the producer is going to engage in a very fierce competition for market share. And as a result of this competition and lower demand, margins and revenues are going to fall sharply. And given the very rigid and undiversified economic structure of the Gulf, this will generate very severe shocks, and their socioeconomic model, which based on rent distribution, will collapse. And of course, with that, their geopolitical status globally will also decline as the importance of oil and gas in the energy mix will decline as well. As I mentioned before, I find this type of analysis very simplistic, very deterministic, and ignores some very key facts about the energy sector in the Gulf, but also more generally about the nature of the energy transition. And I would like to emphasize a few points. To start with, this is a region that has not been standing still. Reforms have been implemented quite widely. So if you look, for instance, in terms of labor market reforms, if you look at fiscal reforms, if you look at the improvement in the business economic indicators to attract more private sector activity and foreign investment, if you look at the e-government. But even within the energy sector, we have seen very ambitious energy pricing reform, an area a few years back no one thought was even possible. We're talking about reforming prices of transport fuels, electricity prices, not so much in gas, because gas is considered to be special fuel for industrialization and competitiveness. Of course, there's still a long way to go, but my first point is that the region is not standing still and really has taken measures to improve resilience and diversify and create new sectors. Also, the narrative of the Middle East emerging as a loser from the transition ignores some very important competitive features of the Gulf, which possesses both in the traditional energy and the future energies. And let me focus on some of these. So if you look in the traditional energy of oil and gas, the region has a very integrated energy sector. It has a very diversified sector in terms of its energy mix. If you think about oil, gas, renewables, and potentially more nuclear, but also vertically integrated into refining, petrochemicals, and specialized products. Also, the region has the lowest cost reserves, the lowest cost of extraction and production, which is going to remain a key area of competition looking forward. Another area of competition, which I think is often not focused on, is that as the world progresses into its net zero journey, the Gulf actually has some of the lowest carbon intensity per barrel of crude. It has one of the lowest methane emissions and the lowest gas flaring. And in the past, competition was very much about cost, capital discipline, and I think as we look forward, the nature of competition is going to change, where we're going to start seeing much more competition on how producers can lower their carbon footprint. And this is really an area where I think the region has a huge competitive advantage that they can exploit. So if we talk, this is basically talking about the traditional energy. If we look more on the new energies, also the region has a lot of competitive advantages. Think about solar, think about wind, think about hydrogen in all its colors, but particularly blue hydrogen. But look at some of the technologies like carbon capture and storage, which I think is going to become a very important area. I think the region can create a very important storage hub for CO2. You know, they have the overall experience both overground and underground. A third aspect that I would like to throw into the mix is that also the Gulf region has not been standing still in climate negotiations. Actually, they have been very active in climate diplomacy. They have announced very ambitious climate targets. And equally important, they've actually been introducing new concepts, like the concept of the circular carbon economy, which the G20 recognizes as one of the ways in order to meet net zero emissions. And sorry, Robin, just one final aspect which I think is worth emphasizing is that I think there are many features of the energy transition that actually could provide opportunities for the Gulf countries. And I believe that the direction of travel is clear, but the speed of the energy transition, I would say, is highly uncertain. The other aspect of the energy transition as well is it's not going to go uniformly at the same speed across the globe. And what we are seeing really is aspirations are moving much faster than the actual changes in the energy mix. If you look back in the 1980s, fossil fuels were 80% of the global energy mix. You look now, it's exactly the same. It's 80% of the global energy mix. And I think these uncertainties about the energy transition are likely to create dislocations, which I think the oil and gas exporters in the region are going to be able to export. And I see a massive wealth of transfer going into this region. For example, if you take the calls to phase out fossil fuels, there are also calls to restrict finance in oil and gas. What this could basically mean is that we're likely to see underinvestment in oil and gas, and we're likely to see a situation where supply falls faster than demand. And as a result of that, we're likely to see higher oil revenues and higher oil prices. And that's why it's really unrealistic to me, when people say that this region needs to move very fast from oil and gas. I don't think it's realistic. I don't think it's optimal. After all, demand's still rising. Consumer behaviors haven't changed fast enough. There are 100 million of people that do not have access to energy still. The sector could still generate massive amounts of rents, which actually are needed in order to create new sectors and diversify into new economies. And as much as people, both outside this region and inside this region, would like to move beyond oil and talk beyond oil, I think oil and gas are likely to remain a very important part of the energy mix, and they will continue to shape the nature of these economies and the geopolitical relations of this region. And of course, Robin, this is not to say that the region will not face challenges, and one can point, of course, to many inefficiencies and challenges. But I think the picture is much more nuanced than the deterministic view that this region is going to be a loser from the energy transition. I really don't see it like that. I see this as a region that can capture many of the opportunities, can adapt, and actually can be one of the winners of the transition. Sorry, I took longer than you gave us. Apologies for that.
Thank you, Bassam. Some very important pointers there, I think, to the future of oil and gas, and I'll make some comment on that in a moment. But first of all, I'd just like to turn to Jaafar, and I think, Jaafar, in our little chat before this event, you had maybe a slightly different view on the way the transition affects the strategic importance of the region. So I'd like to hear your thoughts on that, and perhaps, since it is one of our key topics, you might also want to address the specific question of the East Med and the gas resources and the pipeline options there.
Thank you, Robin. I reiterate my thanks to the Emirates Policy Center, Dr. Tussam Al-Kitbi. 10 years going strong. I never had any doubt. Tawfiq al-Da'im, inshallah. So I was with one of my children. He's 5 years old. I asked him to draw last week the car of the future. He drew a bicycle. Then I had a debate with him that this is not a car, this is a bicycle, and it's a pedal thing. And then he told me there is wings on it and there is a jet engine on it. And then we had another debate that a bicycle is not a car. He then proceeded to draw a spaceship, which is still not a car of the future. And for me, this reflected the uncertainty that we have in terms of the degree of the energy transition that we're going to see in the region. and how it will impact our strategic value as the Middle East and also as the Gulf region. I think for all intents and purposes, the transition is already underway. It's already happened. We are already seeing a diminished value as a hydrocarbon producer. And we have a history in this region of having complacent politics. And sometimes we become complacent and think, no, everything is good, everything is fine. No, we need to be very attentive. We do not have the same strategic value as we had in the 1970s. However, hydrocarbon remains at least 70% of our energy mix globally. We remain a strategic producer of hydrocarbon, and even in the extreme scenario where there is a very quick transition to renewable energy, we are a low-cost producer, so in the environment of low oil prices, we will remain, as a region, the sustainable and viable producer for the foreseeable future. And then I want to just briefly touch on a few trends. And we know that Asia really is where the big demand growth and big consumption growth is coming. We all know about China. We all expect China to sustain astronomical growth year on year, and we get disappointed when Chinese growth is flat. However, Chinese growth is very robust. That means that the growth is robust. It's not declining. Might not be growing at the same rate that we expected every year. But there are other countries that we need to pay attention to. Namely, those are Brazil, Russia, Indonesia, where I believe, and of course India, where per capita growth of demand makes these very important hotspots geostrategically and in terms of the energy growth in the future. And here I'm talking about conventional energy. And we're saying that the geopolitical alliances with those countries and with Asia, of course, it's a priority. But as time goes and as the energy picture becomes more complex, our geostrategic relationships are going to have to be country by country on a bilateral basis as much as they are on a multilateral basis. Of course, a very important point in the trends is the Gulf region is looking to be a leader in renewable energy as well as being a leader in conventional energy. And this is a very important point. I think we are basically much better placed, as my colleagues have pointed out, to be a leader in conventional energy because we are blessed with the geology and we are blessed with all these endowments naturally. Developing a renewable industry requires developing a country in a completely different way. You're talking about the materials that are needed the rare materials that are needed to manufacture the infrastructure. You're talking about the financial system. You're talking about the technology. Most recently, we're talking about the data science, the artificial intelligence. All of these things go towards determining what a renewable energy ecosystem will look like. And still, we do not know the extent to which the transition will happen in our region. And I want to just end by talking about the East Mediterranean pipeline. To me, pipelines and infrastructure invariably depend on political stability. And I'm going to say it, as far as I don't think it's the right time to expect these infrastructure projects to materialize when you have the Arab-Israeli problem, and when you have geopolitical tensions for the foreseeable future. I do think that in this region, we have a power that we are not perhaps directing in the right way to influence geopolitical stability. We are an energy leader. We are someone who is very influential on the energy scene. We can influence the geopolitical stability and connect this geopolitical stability to the development of infrastructure. But there is no point waiting for geopolitical stability until we embark on these projects. We are the ones that have to take the lead, and we have the power and we have the influence to take that lead. But as long as this isn't the case, the Mediterranean and these infrastructure projects in the East Med is, with my humble opinion, it's a pipe dream right now, and I don't think it's going to materialize for the foreseeable future. Very last point, I have 3 scenarios for the pace of energy transition. Right now, we're in a medium scenario in terms of our net zero targets, and really what this means is that we need, and there's going to be a bigger competition for minerals. This is going to have a much bigger competition for the minerals that are needed for the renewable energy infrastructure. And it will also mean a widening gap between the haves and have-nots. High-income countries have the capability to embark on renewable energy more than low-income countries. This will increase the income disparity regionally and globally. Of course, the slow pace is a rude awakening, and there could be a situation where we realize actually renewables are not delivering the value that we want them to deliver. In this situation, the strategic value of the Middle East will boost, the price of oil will boost, and the only region that will have the capacity to meet that demand is the Gulf region. Thank you very much.
So thank you, and I think there are some really interesting and kind of key themes coming up from those initial remarks that I would like to touch on. And I think the first one, I'd like to have one observation on the East Med. I'll use my moderator's privilege to enlarge on that a bit. The geopolitical issues around the East Med and of course the current conflict over Gaza, but just in general the conflicts and disputes there, not just around Israel but also with Turkey and Cyprus, those are problematic, and they have been for a long time in developing those resources. But I would pose the question as like a rhetorical question. Even if this region were the East Med were a very stable and secure region, would those resources have actually come to market in the context of the energy transition, where the EU, as the obvious kind of key market, is very reluctant to commit to financing major new fossil infrastructure, despite the geographic proximity and the apparently attractive economics of those resources. So I kind of put that out there as a rhetorical question. But just to touch on some of the themes that the speakers have raised so far, I think there's a few very interesting and important ones. One of the ones is, we mentioned going back to the 1970s. And at the point in the 70s, I've thought about this quite a bit recently because, of course, we've just had the 50th anniversary of the first oil crisis in 1973. And, at that time, the Gulf was very central to the world economy as an oil producer. And, of course, when its oil exports were diminished, that was a huge shock to the world economy. But it was not very kind of central to global politics or even to regional politics. The centers of Middle East politics were elsewhere. Now, and as we heard from the previous panel, the center of that politics, the center of political gravity has definitely moved and sits in the Gulf far more, and the Gulf countries, and particularly, I suppose you could say the UAE and Saudi Arabia and perhaps Qatar too, have become major political actors regionally and even on the global stage in their own right. So that kind of goes beyond their role as economic powers. The second one, I was very struck by your comments, Karen, on the kind of the South-South trade flows. And that strikes me as another major change, that we're not in the 70s when any surplus oil revenues were parked in US treasuries or London real estate. Now these financial flows are used very actively and invested in, let's say, more value-adding activities and more imaginative kind of activities, long-term strategic projects, but also used as a kind of an opportunity for political and geo-economic influence in the region and more widely. So it struck me as another major shift. And then, coming to your points, Bassam, one thing that I picked up on there, you spoke about the pace of the energy transition. How quickly is it happening, and how the pace differs in different parts of the world, and also, of course, in future, how quick will the pace be? There's a lot of uncertainty over whether it will be as fast a transition as climate policy would suggest, or whether it more likely will be rather slower. But it also struck me, it's not just pace, but it's also the nature of the energy transition. And again, that is different for each country and each region. And you can have a fast energy transition, but that doesn't mean that you immediately are going to 100% solar, wind farms and electric vehicles. There are other components, and you mentioned carbon capture and storage as one. We mentioned hydrogen to an extent, and we mentioned nuclear power and others too. There are other ways of getting to a future energy economy. And the Gulf, and some of the Gulf countries at least, have kind of identified that and are pursuing approaches to that which are quite different from what, let's say, Germany, for example, would be doing. So those are a few of the things that I picked up on. I guess one point I wanted to touch on and ask again for the panelists to comment on is the sources of kind of enduring Gulf economic advantage and opportunity in this world of energy transition. Perhaps we could say a bit more about that. What are the opportunities and competitive advantages and for the Gulf, and how would the Gulf actually realize those? What are some of the barriers or things it would need to do differently to make those into a reality?
May I start?
Please.
I wanted to respond to something that Bassam said as well. I mean, the whole point of diversification in the GCC is not that you can't keep producing oil and gas. Of course you can, and there'll be a market and there'll be demand for a long time. But it's simply not enough money. So I talked about those externally placed assets by the GCC states. So yeah, $4 trillion is a lot of money, but if you divide that per capita, in Saudi Arabia, that's maybe $20,000 per person, whereas in the UAE, that's maybe a nice, bigger chunk, right? Maybe over $1 million per person. So you simply can't afford as a state to keep going with the amount of subsidies and the amount of social outlays per citizen and expect to grow and be dynamic in our current economy. And so that is why sovereign funds have been focused on investing externally in thinking about their role potentially in new energy markets. But that comes with taking it with a little bit of realism and a grain of salt as well. So let's take carbon capture and storage. In the Gulf states, we have about 13 projects for CCS, CCUS. They can capture maybe 20 million tons per year of carbon. That's not enough. We have to increase that by 50% every year until 2030 to even be getting towards a track of where we would need to be. And the whole logic of carbon capture and storage by international oil companies and national oil companies in the region is basically to lower emissions, not lower production, right? So it's not really getting us on the way to thinking about reducing demand for carbon products. And so that's a little bit of a problem. The other problem in the way we think about how hydrogen might be the fuel of the future, green hydrogen or blue hydrogen, is that we haven't figured out what that market or what that carrier fuel really looks like. So green ammonia is very hopeful, or a low carbon blue ammonia is a hopeful kind of product that you see a lot of investment in this region going into. But right now, low carbon or even green ammonia is about 1% of the ammonia we use in the world, mostly for fertilizer. So it doesn't exist yet as a market that we can say, yes, there's a consumer who wants that, and this is how we're going to price it, and we're going to get it out in ships or however as fast as we can. So a lot of our expectations of what can come next and where the Gulf states will play a role in that is right now just sort of spending money in anticipation and in hopes of what might come. And that assumes some risk, especially in the way you think about who your customer is and who you partner with. And so there's been a lot of focus on China as an economic player in the Gulf, but China is not necessarily going to be a great off-taker of hydrogen. Particularly of green hydrogen. Why? Because they've invested so much in their own solar manufacturing capacity, they don't need anyone else to make it for them. They can make it themselves. So the way that the Gulf will relate to China as a destination for oil and gas exports, but also as renewable exports, in 20 years will be very, very different than it is now. So anyway, those are just some examples that I think are important to keep in mind of the pace and scale of transition that is ahead. And absolutely, I agree with both of your comments in terms of the disaggregation and the lack of evenness of who is winners and losers. And that goes for oil producers too. And so it just will not be the same. And I think this rhetoric of a just energy transition is really counterproductive because it gives people the idea that it's possible, and it's just absolutely not. No development process is evenly distributed because access to capital and productivity and change is never even in that way.
I think Karen makes a very important point, is that absolutely this region needs to diversify and they need to implement deep reforms. There's no doubt about that. But I think in parallel, they could take measures to increase the resilience of their oil and gas sector. I think it's very important. This is a source of competitive advantage. This is a source of revenues, which, depending on how the transition goes, the region actually could end up having a huge transfer of wealth, because as I discussed before, it's possible that investment in oil and gas is restricted, and as a result of that, we're likely to see a situation where supply falls faster than demand, especially that we're not seeing consumers' behavior changing so fast, which are consistent with net zero strategies. And this comes to the point how to increase the resilience of oil and gas within this uncertain environment. So one, of course, is to focus on cost, and I think the region has a competitive advantage here. The other one is to lower the carbon footprint of oil and gas production, because I think the competition looking forward is not going to be only on cost, it's going to be on how clean your oil is or how clean your gas is. And this is where I think the region really has a competitive advantage in terms of developing CCS, carbon capture, in terms of electrifying their platforms. There are many opportunities here, and I think as we start transitioning to, of course, we're already, transitioning, but as the decarbonization intensifies, I think this is going to become a key area of competition, and I think the producers are likely to capture a premium if you are able to reduce your carbon footprint, and there's no reason why they are not able to do so. And that takes me to the point that Robin made is, when we think about the transition, we cannot think about one transition. We need to think about transitions because every country is transitioning from a very different position. So the transition in the Gulf, where you have oil and gas reserves, where you have undiversified economies still, is going to be very different from the transition in Germany. And that is why, every country or every region has to exploit its competitive advantages. And the starting point of any just transition is recognizing that the countries are transitioning from a very different position. And just on one point which I liked, where you say, the region has been complacent in the past. And I agree, perhaps one can look in the history, but I think, things have been changing here. And the fact, look at the way they're engaging in climate change negotiations. They are really leading, they're taking a leading role. They're trying, with new concepts, the circular carbon economy, how to capture CO2, how to utilize carbon. If you look at all of these reforms, I really don't see any complacency, of course, could things be done better? Of course. There's always a huge room for improvement. And the final point that I would like to make, which I think you mentioned is very, very important, when it comes to, we talk about infrastructure. I think infrastructure is extremely important because, when we talk about the oil and gas, we're talking about scale, we're talking about massive infrastructure. But it's very important to recognize and emphasize that in the global south, some countries find themselves in a very reinforcing trap. They have high political risk, high currency risks, they are not able to access global financial markets, the cost of capital for them is very high, so they're not able to invest in mitigation projects, in adaptation projects, and they're not able to make those investments, and that actually creates a reinforcing trap, and the question becomes how to break these reinforcing traps, and that's why it's quite important, to talk about the role of multilateral development banks, such as the IMF and the World Bank. But it's very important to recognize that if we want to achieve the investment in infrastructure, such as transmission, such as distribution networks, which are needed in order, to increase the role of renewables, because we focus very much on renewable generation, but we don't focus on the entire value chain, which is transmission and distribution. And that's where cost of capital becomes important. And unfortunately, in the global south, what we see is that their financial markets are not very well developed. They're not able to access global financial markets. And even if they are able to access financial global markets, they access at a very high cost. So that actually needs to be resolved.
Yeah, I think this value chain discussion that Dr. Bassam raises is really the critical question here, that we have to view this as a value chain. We're no longer putting a drill in the ground and getting the oil out and then sitting back and enjoying, and I love going back to the 70s. It's a great time to talk. It was very simple, it was very clear. Our mission was very coherent. Today we live in a much more complex environment. And let's take apart the value chain for a second, if I may, and let's talk about investments. And generally, when you're speaking about green hydrogen, for example, we don't have investment legislation in this region that is equivalent to the US IRA, for example, that incentivizes investors to come and risk. And we have quite still a very risk-averse fiscal policy in this region. And I think when we talk about the region and we say we're not complacent, we're talking about the GCC fundamentally. Now, the GCC, in my opinion, it's the most functional compact. It's the most functional entity in the region. I don't consider this an achievement. I consider this a shortcoming, actually. Because when you look at the wider region and when you look at, again, we're back to haves and have-nots, there are structural problems in this region. One of the structural problems is that our cash flow depends on an oil revenue which is inherently volatile. And while we think that we have a capital surplus, we don't realize that actually we're depending on a price that is here today, gone tomorrow, and then we're back to our sovereign savings. And this is not a viable system from which to develop a renewable value chain. The other one is youth unemployment. If the transition to renewable energy does not translate into lower youth unemployment, you don't have a transition. You don't have a viable transition. And the third one is foreign direct investment. We're back to the initial point that we made, is that the structures and incentives needed to attract the right, not just the right investment, the right knowledge transfer. And then when we are talking about the multilateral banks and the multilateral institutions, they're not going to change for us. They are who they are. And they are not going to change. It's up to us. Is there a situation where we make our own multilateral institution? Is there a situation where we play a bigger role in the multilateral financing and investment regime of the world? But I think we still see ourselves really as oil producers and third world countries and Bedouins in the desert who do not yet completely interact with the financial system in the way that I think we can. But if you look at the knowledge transfer that's happened in the GCC in the past 10 to 15 years, and GCC is on the precipice of a developed state, and I think it has now the capability to project itself in the financial system and in the investment system, and there is where our competitive advantage lays. And Robin made a point earlier that, what is the competitive advantage in this region? We're a region of squandered competitive advantages. We have everything. We have hydrocarbons, we have sunlight, if you want to talk about solar, we have water resources. The trick is how to utilize them and how to maximize the efficiency of these endowments.
Yeah, so thanks, everyone. And one point I think we were raised there that I think is worth touching on. The Gulf is a region of energy abundance, and energy reliability, affordability, security, have not generally been major problems. If you look a bit in the wider region, if you look at the immediate Middle East region, energy reliability, if you look at Iraq or Lebanon or Libya, energy reliability is very poor. If you look at Africa, energy access in terms of access to any kind of modern energy is very limited in much of Africa, and Bassam mentions the barriers to that in terms of high cost of capital and so on. And if you look at Europe right now, energy affordability is a problem, at least if not for governments, but at least certainly for ordinary citizens. So those are kind of different problems or different facets of perhaps the same problem, which the Gulf region maybe has some solutions to. I see that this debate so far has triggered a number of questions, so let's go to the audience, and I'll start with some of the questions. And if I could start in order with Assad, please, if you could give us your question.
Okay. Thank you very much indeed. Excellent panel, no doubt. And I want really to take this as an opportunity to elicit your insights on one question of two parts, and I will include our distinguished moderator if he would like to chip in on this question. And that is, when I talk about the region, I mean the GCC countries. I don't mean the wider area. Now, as you know, transition in this region, in the GCC, it doesn't mean simply environmental friendly policies, etc., as important as this is, but it's also a transition to an economy where you have a diversification, where exporting oil is not the backbone of the economy. Now, my question is this. Do you think that the GCC, objectively I mean, do you think the GCC countries are better off doing it individually or in a collective? I mean, if we look at the GCC as an organization, as a body, the problem with it in the past is the different conceptions of foreign policy and security policy. In recent years, we have a new phenomena where there is a competition between the GCC countries on attracting investment, various forms of making mega projects meant to be ways of diversification. Now, perhaps this is a better policy for each country, or do you think, given your expertise, that the GCC countries better stick as being or work as one block? And here, can you have a block, a trading block, which is not underpinned by shared foreign policy, security policy, legal regulations, and educational system? I mean, can we, as it were, in the attempt to make a successful collective transition, also we will overcome the old problems? Or maybe it's better, more rational for each GCC country to find its own path, whether through globalization or perhaps some sorts of regionalization. Thank you very much.
Pardon me. Thank you for the question. Yeah, I think that's very interesting. I actually just coincidentally returned from Rome for an event last week where we're asking a very similar question. How could the GCC cooperate more in the economy and in energy specifically, and what could it do more regionally if it were to act more collectively? And there's a lot of comparisons there, I suppose, to the early days of the European Union, and how did that grow out of economy first, or politics first, or institutions first, and how did that develop? So I'd like to put the question to any of my panelists who'd like to comment on that.
Yeah, sure.
Okay.
I think the ship has sailed. The GCC as an economic union is no longer. There is no common tax policy. There is no common or reliable treatment of foreign investors or even GCC investors within the organization states. And it is absolutely a competitive market in terms of traditional oil and gas, but especially into renewables. And it's a business, right? This is not something that is meant to be done collaboratively as a charity. It is a business, and it's a serious business. So even in the way that we think about commitments to the wider region. For example, a company like Fertiglobe, big international fertilizer company, half owned or 30% owned by a UAE entity, state entity, is not going to be building a large facility in Egypt to create green ammonia. They're going to do it here. That's because if you can only spend a little bit of money at a time and you want to get into a market, you're going to do it at home. You're going to do it where maybe there's advantages politically or more stability, et cetera. In terms of the green hydrogen projects across the GCC, only one has come to final investment decision, and that's in Saudi Arabia. We see a lot of difficulty in Oman and even difficulty here in the UAE. And so, that's going to be a competitive market. And it's also competitive with the IRA in the United States, right? So more and more the United States as an LNG exporter, but also getting into the clean hydrogen market, will be competing directly with the GCC states. So that doesn't create an atmosphere for more cohesion or collaboration, certainly on key export items, but I think it makes the market even more competitive, which is not necessarily a bad thing, in my view, but it doesn't lead for the GCC becoming a tighter economic union.
Just to add a couple of observations to what Karen said, it's bound to create competition, because if you look at the Gulf countries, they're diversifying into similar sectors. They all would like to become the financial center of the region. They would like to become the tourism sector of the region. So there is bound to be competition. So I think most likely that each of the countries, they're going to go their own ways on how to diversify. But having said that, and also if you look at the petrochemicals, one of the ways to try to diversify within the oil and gas sector is going into petrochemicals, and we see that many countries are going in the same direction. And actually, this is exactly what China is doing. So China becomes not only one of the Middle East biggest customers in terms of crude, but eventually is going to become one of the biggest competitors because they are building their refining and petrochemicals, and they were likely to compete on that front. However, having said that, I think there are some areas that there is some potential for collaboration as the world transition into their net zero strategies. For instance, one area I would see that the region can collaborate quite strongly is creating CO2 storage hub, because CO2 needs to be stored. And I think as a region, if they are able to collaborate on creating common storage hub for CO2, developing the standards and regulation around CO2, I think this is a very important area. Another area perhaps that the GCC can collaborate more strongly is in the transmission of electricity, not only through the region, but beyond the region, because I think this is going to become a very important area where the region is not going to be only transporting oil and gas or molecules, they're going to be also exporting electrons as well. So this is an area that there's a huge potential for collaboration. But that takes me to the point that I think was mentioned by one of I think it was perhaps Karen, is that you need to create the incentive structure. And I think this is actually missing. I think you pointed to that point, to that observation, is that how to create the incentive structure. In Europe, it's all about carbon taxes. It's about cap and trade system. In the US, it's about providing subsidies. Mm-hmm. Here in the Gulf, we're not sure, what exactly it is. If you want to incentivize investments in green hydrogen, blue hydrogen, is it going to be a carbon tax? Is it going to be a cap and trade system? Is it going to be just subsidies? How sustainable those subsidies are? I think these are very, very important questions that, it's a matter of time that the governments of the region have to tackle.
I think this is one of the most important questions. If we create a bloc, if the GCC does it as a bloc or not, to me, this is the most important question that will decide the success of this program. And honestly, we live in an age of hybrid now. We don't live in an age where you can have a bloc and it's a happy union. So it's got to be a loose bloc, a kind of marriage of convenience or marriage of inconvenience, depending on how you look at it. But it's got to be something which is unified with common interests in certain components, but we agree to disagree on other components. And this is the real politique of how effective blocks will actually work. But without this kind of block, and without leveraging on the GCC strengths, I don't think it's possible to build a renewable energy value chain, because renewable energy is not like oil. I mean, I love oil. You get it out of the ground, you put it in the ship, you send it somewhere, and then they pay you the money for it. With renewable energy, you need an infrastructure, you need a very sophisticated value chain, and all of that comes from blocks. And if you look at Europe, had it not been for some kind of bloc or economic union, it would be much more difficult to develop that kind of value chain in Europe.
Thank you. So we have at least for now 2 more questions, and we have about 8 minutes remaining. So if anybody else wants to ask a question, please do dive in now and take your chance. But I'll just take the 2 remaining questions and then put them to our panelists. So first, Hani Findakli, if you could give us your question, please.
Thank you very much, and thanks for a very useful discussion. My question is about the energy transition that's been discussed by this panel, and the fact that its pace has been too slow and it's inconsistent with the urgency of climate change has been discussed throughout this conference. So my question is, what explains the slow transition that's taken place so far? Is it economic? Is it a question of cost and access to financing? Is it technological? Question of creating scale and cost-effective supply? is it political question of subsidies and what have you, or is it just a complacency? There is a school of thought that's looking at this subject currently, and I consider myself a part of it, and that is that in order to speed up the transition, that focusing on supply management, demand management as compared to supply management may accelerate that process. So I'd like to get your views and explanation for this. Thank you so much.
Okay, thank you. And we have one question from Yusuf Al-Balushi, if you could give us yours, question, please.
Thanks for the informative panel. I have two questions. The first one to Dr. Karen, related to access to the capital and productivity. As all GCC, moving toward economic diversifications. And we are, suffering of access to capital. It's very costly. And also, we are having a limited success in attracting more of FDI to the region. And if we look also to the structure of our private sector, there is issue related to the competence to able to really dive deeper in diversification. This is number one. The second question is also to Dr. Bassam and Jaafar, related to the degree of uncertainty in energy transitions. We can see there is a strong move from Oman, from UAE, from Saudi toward hydrogen and move toward renewable. How wise is this move? And for example, instead of diversifying more within the oil and gas itself by building more of downstream, because when it comes to the technology of the hydrogen, and it's really sometimes as an expert, both of you in the energy transition, what's your take on this?
Okay, thank you. So I think we'll take the specific questions first. That's a bit easier. So the question you, Karen, I think is on the issues of attracting FDI and investment in diversification in the region. So,
right.
Please.
So access to capital in the GCC is not a problem. Even now, Oman has really changed its sort of credit profile around, there's not an issue. Not like you would see for other or low and middle income countries in other regions. So it's not an issue at all. The FDI story, particularly in the Saudi case, has been a story of crowding out, of the dominant role of the state, of the PIF as an investor, and reputational risk. That's not been a problem in the UAE. The UAE is the biggest magnet of investment in the Middle East and Africa as a continent. It stands out. And so this is where you really see the difference in where policy matters and how you can change the profile and attractiveness to an external investor. For weaker economies, if you think about access to capital and their needs, for example, building new power plants and how you make a choice of, do I borrow money and build a gas-fired plant or a solar-powered plant? Basically, if the cost of capital is more than about 7%, then it's not affordable for a indebted or lower middle developing emerging market economy to borrow to build a renewable power infrastructure. So there's a very clear line, right? And so there are ways that multilateral development banks and sort of partnerships in finance can make that more affordable. And sort of working around currency risk as well is one way that people are talking about doing so.
Yeah. Now, I do want to come to the last question. So perhaps if we could just very quickly address the point, green hydrogen, renewables, is that the right way for the region to be going, Bassam and Jaafar?
So very quickly, Robin, because I'm very much conscious of time. I think this is a very important question, because the pace of the energy transition is really highly uncertain. It's not going to be uniform across the globe. It's likely to go faster in some regions than others. And there are many determinants of that. Of course, one of them is whether the transition is just or not. But I think one of the key factors is whether those projects are commercially viable. Because what we're trying to do with that transition is we're trying to move away from energies which are very efficient to very profitable to fuels which are actually less so. And that depends very much on the government signals. whether the governments are willing to, to send the clear signals, whether they are willing to incentivize either through subsidies, through carbon taxes. And that's why, despite of all of the hype about hydrogen, particularly green hydrogen, if you look at most of what we're seeing at the moment is that a lot of MOUs, there isn't really commercial agreements yet at a scale that are going to say, wow, the hydrogen is going to play a very important role in the future energy mix. And that basically boils down to the commercial viability. Are we able to create commercially viable supply chains that actually are able to scale up? Because I think what people really don't recognize or perhaps don't appreciate very much is the scale of the energy industry. If you think about oil, we consume on a daily basis almost 102 million barrels per day. Can you imagine the scale, the transport infrastructure, all of the things that goes through from extraction all the way to the delivery? And this is what is really needed, to create scalable technologies, developing those supply chains. And that's why it may take longer than people are anticipating.
So we're actually, as a company, investing in hydrogen in the region. And the economics of the hydrogen is terrible. I mean, they are really, really bad. And we are absorbing the loss because we have an expectation that the system in the region is going to improve, and we want to be part of the education of the evolution for investment incentives. So hydrogen on its own, terrible economics. Hydrogen with IRA and state subsidies, one of the best investments you can make. So there is the missing gap, and I think the real question is the GCC ready to take more of a leadership in this role? I think the answer is yes, but we wait to see.
Can I answer the degrowth? The degrowth question, Hani Finley's question?
Please.
So I love that you raised this. We do have to think about demand. It doesn't work otherwise. We won't meet our objectives. So we have to reduce our demand. But the problem is the track we're on, particularly in demand that artificial intelligence and data centers create for energy. I mean, the fastest growing energy demand in the United States, some of our colleagues at Columbia are working on this, is in Loudoun County, Virginia, right? Just outside of the Beltway. And that's because they're building all these AI data centers there. They need to build like 4 nuclear power plants to meet the demand for electricity in this one little county. So yes, it would be nice if we worked on the demand side, but the way our economy is growing, and I think we all see that as a benefit, means that we just need more power. We need more electricity. It's got to come from somewhere.
Right. Well, thanks. I think that's a great note to end on, because that is part of the future economy, but a reminder that the future economy runs on energy, which is a bit of the old economy and a bit of the new economy. So that's absolutely part of the future of the region as well. So thanks to my panelists. I thought a wide-ranging discussion, a very interesting one. And thanks to the audience.